There's a company that I've had on my watch list for a while because this company fascinates me. It's one that I wouldn't say I'd consider buying, but I like to follow it to see how it does, and it might be a good buy. That's what we're going to cover today, whether I think it's a good buy or maybe you should stay away from it due to X, Y, and Z reasons. Now, the company is CAVA, and this company has been a hot topic in the market lately. The stock has shown strong growth potential with revenue increasing by 33% in 2024 and same restaurant sales rising 21% year over year in the fourth quarter. Analysts see significant long-term potential with the company planning to expand from 367 locations to over 1,000 locations by 2032. However, this stock has faced some challenges with a recent stock dip, or shall I say it's almost been a significant correction in my opinion. We'll cover the numbers in a little bit, but there's also concerns about its high valuation. Now, while some analysts have upgraded it to a buy with price targets implying ample upside, others caution that its current valuation might make it a very bumpy ride for investors. Now, before we get into the meat, let's talk about CAVA and what it is. It's a Mediterranean-themed restaurant that uses an assembly line style preparation system. It cooks the food in a kitchen behind the counter so customers know it is freshly made. And the assembly line allows customers to fine-tune their choice to their specific taste preferences. So basically, this is really what Chipotle Mexican Grill does, only they have the Mexican theme. This one has the Mediterranean theme. Now, Chipotle has grown massively over the years, and despite some recent price weakness, this one has been a huge winner for investors. So will CAVA be the same situation in the future? I don't know. But let's look at the food options because I think this is just fun to look at. So we'll see there's spicy lamb and avocado. That sounds good. They have steak bowls and then they have chicken bowls, or you can just get like a Greek salad. Now, some of these you can opt for a grain, I think with rice instead of the lettuce. And then there's pitas. So you have chicken pitas, steak pitas, and you have Greek pita. You have options. Now, you can customize these and they have a few other options, but it's mainly the bowls and the pitas. So it looks good. I think that this is something that health conscious consumers do want. But now let's look at what they're really concerned at with this stock, and that's valuation. So let's go over some metrics. First of all, the price to earnings ratio. CAVA's trailing PE ratio is 76.47 and its forward PE ratio is 150.51. These figures suggest a high valuation compared to earnings, which is common for growth-oriented companies, but that means they have to stay on this level of growth or risk investors saying sayonara because they don't believe that they can hold up to their projections in the future. Then price to sales ratio. The price to sales ratio is 9.98, indicating how much investors are willing to pay per dollar of sales. Now, I will say this isn't a high price to sales ratio if you're comparing it to the general market, but in the restaurant industry, it is high. Then there's price to book ratio. At 13.92, this metric reflects the market's valuation relative to the company's book value. Then you have enterprise value to EBITDA. This ratio is 89.24, which is quite high and reflects the company's valuation relative to its earnings before interest, taxes, depreciation, and amortization. Then you have the debt to equity ratio. CAVA has a debt to equity ratio of 0.54, showing a moderate level of leverage. So they're not drowning in debt, but they're not debt free either. Then there's return on equity. This return on equity for this company is 20.58, indicating how effectively the company generates profit from shareholders' equity. So that is a bright side to its valuation. So these metrics highlight that while CAVA shows strong growth potential, its valuation is on the higher side, which could pose risk for investors. Now, I think it's good to look at its recent earnings results. So if we look at revenue growth, CAVA reported a 28.3 increase in revenue for Q4 of 2024, reaching $225.1 million, and for the full year, revenue grew by 33.1% to $954.3 million. Now, same restaurant sales growth. In quarter four, they saw a remarkable 21.2% growth in same restaurant sales, contributing to a 13.4% increase for the entire year. Now, new net restaurant openings. The company opened 15 new restaurants in Q4, bringing the total to 367 locations, an 18.8 increase year over year. Now, profit margins. CAVA achieved a restaurant level profit margin of 22.4% in Q4 and 25% for the full year. Regarding net income, Q4 net income was $78.6 million, including an $80.1 million benefit from a tax-related adjustment. So excluding this, adjusted net income was $6.5 million. Now, these results highlight CAVA's strong growth trajectory and operational efficiency. As mentioned, the stock has taken quite the dip. The reason for that is the company provided lower than expected guidance for 2025 same-store sales growth. It expects growth of 6 to 8%, down from the 13.4% in 2024. So it's almost being cut in half. This expected slowdown caused the stock to plunge immediately. Additionally, tariffs could also cause higher prices for customers. This could slow down growth if CAVA passes the cost on to customers or cause margin compression. So do they take a hit with their profits, or do they potentially take a hit with customers by increasing prices and losing some of their customers because they will start going somewhere else that's less expensive? Now let's talk about this company's strength compared to its competitors. First of all, they have a Mediterranean focus, something new that I haven't seen out there. CAVA specializes in Mediterranean cuisine, a growing segment in the fast casual market, appealing to health-conscious consumers seeking fresh and flavorful options. And I personally, and I do believe this, I believe there is a shift towards more health-conscious eating, and so I think CAVA has opportunity to capture a lot of that market. Then this company, one of their other strengths is they have a strong brand identity. Its commitment to high-quality ingredients and customizable meals resonates with a diverse customer base, setting it apart from more generalized fast food chains. Then there's the rapid expansion. CAVA has been aggressively expanding its footprint with plans to grow from 367 locations to over 1,000 locations by 2032, as I mentioned, and this showcases its ambition and growth potential. Then one of their other strengths is their operational efficiency. The company has demonstrated effective cost management and operational strategies, contributing to its profitability and ability to scale. And then there's customer loyalty. CAVA's focus on fresh, healthy, and customizable meals has fostered a loyal customer base, which is a significant advantage in a competitive market. I also like to think of other companies like Chipotle. They have a very big loyal customer base, and others like Texas Roadhouse. There's a lot of restaurants out there that have that loyalty, but there's others that don't, such as Burger King. So if you have it, I think you have that potential for growth, and CAVA seems to have it. There is not a CAVA here in my hometown of Albuquerque, so I can't say to that aspect of if I see these places are packed or not, but I got to go by the numbers, and it sounds like, yes, they have a loyal customer base. Now let's go over the risks with investing in CAVA. Of course, that high valuation we talked about. CAVA's valuation metrics, such as its price to earnings and price to sales ratios, are significantly higher than industry averages. This indicates that the stock is priced for perfection, leaving little room for error. Another risk is rising costs. The company faces increased labor and input costs, which could pressure profit margins. Legislative changes and new menu items have contributed to these rising expenses. Then you have slowing growth. While CAVA has showed impressive growth, its projected same-store sales growth for 2025 is that 6 to 8% I mentioned, which is down from that 13.4% in 2024. This slowdown could impact investor sentiment, and I think that's what it's already been doing. Then you have the market competition. The fast casual dining sector is highly competitive. With established players like Chipotle and Shake Shack, CAVA's ability to differentiate itself and maintain customer loyalty is crucial. Then there's economic sensitivity. As a discretionary spending category, the restaurant industry is sensitive to economic downturns. Inflation or reduced consumer spending could negatively affect CAVA's performance. The last risk is expansion risks. CAVA's aggressive expansion plans involve significant capital investment. Any missteps in execution or underperforming new locations could hurt profitability. So the real challenge for this company is while the outlook is positive, slowing revenue growth rates and rising costs could pose challenges, and analysts predict a deceleration in growth compared to previous years. And if we look at analysts' sentiment on this stock and their future expected potential upside, it does tell a unique story here. So the upside is 53.26%. Now this goes out 1 year. So they're saying if you invest today, you could potentially be up 53% a year from now. But they're not saying it's a buy. It's an outperform, and it's right in the middle between a hold and a buy. And I think it's due to their risks with high valuation and other concerns that I mentioned. And so yes, you have something that has a high risk, but also high reward, so that is up to you. And if we look at that stock that I was talking about, you will see over the past year, if you bought 1 year ago, you're doing good. You're up 25%, but it did have a huge correction. And from its all-time highs recently, it's down 45%. So that is something to consider, that maybe investors are starting to level this out, put in a little bit more thought, and consider that high valuation. So overall, investors are betting that CAVA is the next Chipotle, and there are signs that CAVA could achieve this with their growth trajectories. The risk for new investors is that this stock is at a point where it's a little too late for you to join, as many of its future growth potential is already baked into the stock price. So if valuation matters to you, then this may not be the stock for you. Rather, you would have to be confident in its future of explosive growth prospects. And while the stock is expensive, the opportunity does remain robust. And management is executing very well right now. They're aggressively opening new locations while at the same time keeping sales at existing locations high. If the restaurant chain can continue to resonate with customers, there's no reason to believe it won't grow into that lofty PE ratio. I think a very important metric to follow closely if you're considering the stock would be same-store sales. They've had 18% growth, which is unlikely to continue, so expect a reduction, but as long as it stays around 10% and not much lower, then this stock should do just fine. Now, CAVA does not pay a dividend, so you may wipe it off your consideration already if you're a dividend investor. So again, you would have to believe in an aggressive growth story. There will be turbulence with this highly volatile stock, but if the best scenario comes true, then I do think that the 50% upside potential is possible, but this stock has to be perfect with little room for error. Otherwise, it's a higher risk stock due to its valuation with little room baked in for any bad news. So for me, I'm staying out of this stock. I just don't like to put my money into a stock that has to continue being perfect based on its current valuation. I like room for error. So I think this stock would have to drop significantly for me in order for me to consider it and buy in. But let me know if you own it and what your bullish thesis is on CAVA. Now, I do have a surprise for y'all if you've stuck through it with me through this video, which I appreciate. Here's my portfolio, and there is something new about it. Yes, you'll see there, I have a new stock, and it's Google, and this will definitely be my next video. I'm very excited. It's been flirting in the red and green by 1 to 2% or less, but nevertheless, I think this stock's going to be a huge winner for my portfolio. It's already a 7% allocation, so I went all in. I will be adding, and I'm excited to talk about this to you guys. But back to CAVA real quick. If you have CAVA in your area where you live, is it busy? I'd like to know. And have you gone, and do you like it? Put your opinions in, because this will help people invest in as well, because I like to see the places I invest in, especially if it's a restaurant that is busy and, every time you pass, are they packed or are they dead like some other places? I'm picking on Burger King again, but yes, I don't ever see many people in that line. So thanks for tuning in and happy investing, and we'll see you next time on Mark Arnold's Finance.